Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Wolf Richter, publisher of WolfStreet.com. He's speaking to us from San Francisco. Welcome back to the show, Wolf.
Thanks for having me back, Jim.
Wolf, what's the deal with this semiconductor shortage that everybody's talking about?
Well, that's sort of a once-in-a-lifetime opportunity to look at a messed-up market. The semiconductor shortages are now impacting just about any industry that's building anything with electrical systems in it. And that's from automobiles to appliances to anything. And it is not that the semiconductor industry isn't making large numbers of semiconductors. For the last 3 months, they have cranked out a record in dollar amounts, a record volume of semiconductors. In July, we had $45 billion in semiconductor sales. So there's a lot of supply, but it's just not enough. And the supply is in part not enough because there's a huge amount of backlog because we had some major plant shutdowns. There's a fire in a semiconductor plant in Japan that shut it down for over a month. And that plant specialized in semiconductors for the automotive industry. And then there are 3 plants in Austin, Texas that shut down during the big freeze. One of them were for close to a month, and in another for over a month, and now we've got all kinds of semiconductor plants being shut down in Asia, Malaysia especially, due to COVID. They've had some employees die of the virus, and so they shut down the plant for 2 weeks to disinfect it. And there's a lot of these plants are sort of getting shut down on a rotating basis. And so it's really hard to catch up with the demand there is for these semiconductors. So that's on the supply side. On the demand side, we've had a record spike in durable goods sales, and in the United States particularly, but more broadly speaking in the world, and that was caused by this enormous amount of stimulus spending, particularly in the United States. And when you look at these charts, they're just out of this world as to what people have bought. And most of these products have semiconductors in them. And so this started last year, and it hit the industry when there were supply constraints. And now we have this enormous amount of backlog, of inventories are short in a lot of things, and so even if the semiconductor industry makes enough semiconductors, it will take a long time to just work through the backlog that exists. And so the semiconductor shortage is a real problem for the economy, and it's not going away anytime soon. Earlier this year, it started showing up almost a year ago in late 2020, and then we became a more serious issue for the auto industry earlier this year. The industry experts expected that to sort of go away by the end of this year, and now it's completely changed. Everybody is wishfully thinking maybe that it might go away in 2022, and it may not. If this demand for consumer goods continues as it has, this horrendous spike in demand for durable goods, it might not, the semiconductor shortage might not go away for a while. And then we have the shipping problems and all these other issues. So, the semiconductor shortages turn into component shortages, and even if the semiconductors get made and the components get assembled, then the components can't be shipped because of the shipping problems that we've got. So it ricochets through the system. And, so, there are now expectations that we'll have to live with this, for a while. Of course, the best solution would be, to curtail stimulus, so that, consumers, buy less, durable goods. And, and of course, there's some discussions of doing that, but nobody really wants to seriously crack down on consumer demand for durable goods. That would stop that problem. That would allow the supply chains to catch up. But until that happens, for right now, the industry is ramping up. There's lots of investments being made. There's tens of billions of dollars being set aside for new plants and new equipment and all kinds of things. But this takes a long time. You can't just build a semiconductor plant out of nothing in a couple of weeks. So this is a long-term project. And so for now, in the short and medium term, the industry in all different sectors will have to continue to grapple with what is a significant burden on the economy. And any slowdown in sales like we've seen in the auto industry is due to the semiconductor shortage, not the demand. The demand is huge. It's just it can't be supplied because of some of these critical bottlenecks.
Now, you're saying that this is going to last a long time. What's this going to do to the world's economy? It doesn't seem to matter what governments do now. It's down to a couple of plants that make these chips.
Well, if we can't come up with the supply, the best solution would be to back off stimulus spending. The consumer is overstimulated. They're spending money like there's no tomorrow. And on durable goods, they should be spending it on services and on vacations and those kinds of things. But they're spending it on durable goods, and the world cannot supply those durable goods. So the best way to undo this snag supply chain is to end the stimulus all around. And that's central bank stimulus and that's government stimulus, and so that consumers back off from from the surge in demand for durable goods, and that would solve that issue pretty quickly. If consumers stop buying vehicles because they're getting too expensive and they're hard to get, if consumers actually just walked away for 6 months from buying vehicles, then the supply chains could catch up and we could become efficient again. Now, the problem with these shortages is that the whole system becomes very inefficient, and productivity goes down. Everybody's chasing things down. Everybody's trying to figure out how to get around these problems. To get back to a sort of efficient manufacturing and supply chain model, we need to curtail demand. That's really what we need. The central banks need to raise interest rates, and then need to unwind their balance sheets, and they need to do all these things that they're not really wanting to do, and that would solve the problem.
In your podcast, you called the U.S. economy the most overstimulated economy ever. I think we hinted at that, but what do you mean?
So in the United States, we have about $4 trillion in the Federal Reserve's money printing, and we had $5 trillion in the federal government's deficit spending. So that's $9 trillion. The $4 trillion from the Fed went into the financial markets, so that caused a huge boom in asset prices, and the asset holders that benefited from it, so that's homeowners and stockholders and bondholders and holders of derivative products and all kinds of things, so they feel very rich, and that's the so-called wealth effect. That's the purpose of all of this money printing. And so they're starting to spend this money, and since it's money they got for free in the markets, they don't really care how much anything costs anymore, so they go out and they buy expensive trucks, and they buy all kinds of things, and without really trying to negotiate the price. And then we've got $4 trillion worth of deficit spending from the government in a year and a half, and some of that went to companies, and some of that went to individuals. And so they're now spending this money. And when you look at the layers, there's another layer in that. So it's not only government spending on central bank money printing that's handed out. It's also the fact that many consumers don't have to pay for certain things anymore. So in the United States, we have the eviction bans, a national eviction ban that is now expired, and for tenants didn't have to pay rent anymore. So now they got unemployment money from the state, and then on top of that, they got $300 a week in unemployment money from the federal government. So many of these laid-off employees make more money under unemployment than they did before. And the idea was to allow them to pay the rent and the housing costs, And so after that was done, then the government imposes an eviction ban. So now they don't have to pay for their rent anymore. So they can spend all this money that they're getting on other things, and that money is tax-free, unlike the regular income, which is taxed, and there are also healthcare benefits and other things associated with it. So it's really a good deal. And the people have been spending this money. And, then we had $800 billion worth of what we call the PPP loans that went to small businesses. Well, everybody got that. $800 billion is a lot of money. That was handed out for small companies, meaning self-employed people, just anybody who applied for it got this. And it was intended to keep the payrolls alive, but there's been studies done now, one after the other, that pointed out that it really didn't help a lot of companies. What it did do is provided $800 billion in spending money to small business owners and many other entities. And so this money is getting spent. And then there's a lot of money that was given to big companies. That includes $50 billion for the U.S. airlines. That was designed to keep staff and not lay them off. So the airlines used this money to buy out their employees last year. So they actually didn't keep their staff. They just had these voluntary retirements to offer these big retirement packages. Well, these retirement packages came with lump sums. And so these employees that voluntarily left the airlines, they had suddenly all this money to spend. They started spending it. So it was layer after layer. And then we had, in addition to the eviction ban for tenants, we had the forbearance programs for homeowners with mortgages. So mortgage payments didn't have to be made. At one point, there were over 5 million homeowners that were in these forbearance programs. So they got all this money from the federal government for the unemployment and from the state for the unemployment, and they got these other benefits, and they didn't have to make their mortgage payments anymore. And so they had all this extra money, and they started spending it. So we've had this huge burst in consumer spending in the United States. I mean, it's just unbelievable how the charts look. They're just mind-blowing. And it causes all kinds of issues. It causes issues in the labor market because now people get paid to not work. And, I've proven with data that that's actually the case now. So, we've got a labor shortage because of that. We just got the open jobs report today. And, there's 11 million open jobs and we have, 12 million people claiming unemployment benefits. And, we've got this situation where companies can't hire people to do the jobs. They've raised their wages. They're offering hiring bonuses, signing bonuses. They improve the benefit packages. They're hiring people from each other. So they're poaching their other companies' employees. And it is just a really messed up situation now that we have because of this enormous amount of stimulus, this enormous amount of spending, the removal of the regular requirements to pay for things such as student loans, mortgages, and rents, and we've got all this money circulating, and $9 trillion so between the Fed and the federal government. That is a huge amount of money given in an economy that's a little over 20 trillion. So $9 trillion in an economy over 20 trillion. That's how much we threw at it. I mean, this is just a gigantic amount of money when you look at all the different layers. And, every day there are new distortions that are coming up and new problems and new issues that, the economy is not equipped to deal with because it's never been through anything like this, and whether it's the labor shortage or the semiconductor shortage or any of the other issues that we're having. It is just an overstimulated economy. The central banks and the government need to back off of the stimulus, and that will cure some of these issues. And it's just that all these programs were put together so hastily and with no time at all, and they were overdone, and they were huge and gigantic to an extent nobody ever thought possible before. And this recession was the shortest recession in U.S. history, and the economy has been booming, and we're still stimulating like crazy. So, this is something that will bedevil us for quite a while. This is we're going to live with shortages. We're going to live with excess demand. We're going to live with people not wanting to return to the labor market. There's a lot of people that feel really wealthy because of the asset price increases. They have no intention to work ever again, because they feel really wealthy. And I went through one of these sensations in 1999, and obviously when the market crashes afterwards, the people are going back to their day jobs. But until then, we've got this really, really messed up situation, and it won't really end until the stimulus ends.
We'll have more with Wolf Richter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Wolf Richter. Wolf, how's the auto industry doing in this environment?
Yeah, so this is an outgrowth of the semiconductor shortage, and there has been strong demand for new vehicles. In March and April, the sales numbers were still pretty good, and pretty good meaning very, very high. And then the industry ran out of inventory, and now it's to the point where the last few months inventory on the new vehicle side has been at record lows. And it's getting worse every month. And popular models are completely out of stock. The only way you can buy one is to order them and waiting patiently. The other models get bought off the car carrier when they come into the dealership. And it's really, really tough to buy a new vehicle. Prices are sky high. The automakers have prioritized only the most expensive, high margin models. So, if you're looking for a lower-end vehicle, they don't even make it anymore. So automakers have this problem of not being able to make all the cars that they want to make that they could sell. So they're making the most costly vehicles or the most expensive vehicles so that they can maintain their revenue base. And that's what's been happening, even though the revenues are now also going down because the volume can't be maintained. And but it's a completely one-sided situation there. It's only the high end that's being built, and in terms of sales, they have plunged. They're down 20% from May and from April, and they're down like 24% from 2 years ago in August. We've had 4 months in a row of steep sales declines. There's inventories which is completely depleted. There's hardly anything left to sell. A lot of the cars that you see on the lot are new vehicles, and some of them are rental cars. And some of them, manufacturers are thinking about finishing vehicles to the point where there's just one component missing that they can't put in, the semiconductor shortage, and then moving that vehicle to the dealership and letting the dealership finish the vehicle when the component arrives. And I mean, there's all kinds of weird options being now considered that wouldn't even be on the table in normal times. And so that the auto industry is getting hit really hard. There's one plant shutdown after another. These are these rolling shutdowns of 2 weeks here, 2 weeks there, going from 3 shifts to 1 shift. Pickup truck plants are being hit hard. Now, these are the most profitable units for the automakers, and they can't make enough of them. It impacts every model. And it's, the chips are going to, they're just thousands of chips that go into a car. And it's not the expensive chips necessarily that are in short supply. It could be a cheap microprocessor that hardly does anything. It regulates the tire pressure gauge that you have in a modern car. You know, when you drive and you look on the dashboard and it shows how many PSI pressure you have on each tire. And, you know, if that unit is missing, you can't assemble the car fully. You can't sell it. You can assemble it partially, but not fully. And it's a cheap microprocessor, but you can't finish, you know, a $40,000, $50,000 vehicle because you don't have it. And so, you know, this has gotten to be a very tough situation for car buyers, you know, new vehicle buyers. And what I can't understand is anybody's even trying to buy a vehicle now. You know, new vehicles, used vehicles too, are discretionary purchases. Most people can continue driving what they have for a year or two, and you know, and they'll be fine, and they don't have to buy now, but they're still trying to buy, and so the inventory shortage continues. Prices are sky high. The average transaction price in August was $41,000, a record. That's been, for new vehicle. Think about this. It's US dollars, $41,000 for the average transaction price of a new vehicle. That was $35,000 last year. And, it's just amazing what this does. People are still trying to buy and driving this thing forward. So it's this mindset that has set in. I made all this money in the stock market. I made all this money in the real estate. Now I'm going to blow it on a $80,000 pickup truck, and I don't really care how much of a sticker the dealer charges me and how long I have to wait to get it. I'm going to buy it. And this is, this demand continues despite the high prices, despite the inventory shortages, despite all the issues that automakers are facing. And the demand is there, but the supply is not there, and so sales are way down. But, if the lots filled up with cars, the sales, would jump, and maybe prices would come down a little bit too. And these prices over sticker, would go away possibly. But, at this point, that's what the auto industry faces. And it's on the used car side, it's the same thing. The rental cars there's 2 to 3 million rental cars that feed into the used vehicle inventory every year. They essentially stopped, or slowed down a lot, last year. And this year, so there's a supply issue there from the rental car industry. They're not getting any new cars, so they're hanging on to their inventory. And so they're not running their units to the auction. Dealers can't buy them. So their dealers are running shorter inventories. Not as bad as on the new car side, but the inventories are down, still down by 10 to 20%. And sales volume is now starting to take a hit because there's not enough vehicles in stock that customers want to buy. And so the whole auto industry is volume is impacted. Prices on the used vehicles that have completely spiked. I mean, they've gone completely nuts. On many vehicles, it now costs more to buy a used vehicle than the new vehicle would cost, the equivalent new vehicle, if it were available. But you can't get it, and so they buy a used vehicle and they're paying for it as much or more than they would for a new one. And this is really just a completely messed up situation. I have never seen anything like this before. The dealers and automakers are grappling with it. They're trying to work their way around it. As I said a minute ago, the solution would be for customers to back off and allow supply chains to catch up, allow inventories to catch up, and allow prices to come down. And that's not happening. People are still buying vehicles off the convoy, and they're still ordering them, and they're still trying to get their hands on a new vehicle or used vehicle. And so at this point, that's the situation we have.
Wolf, thank you so much for chatting with us.
Thank you, Tim.
My guest has been Wolf Richter, publisher of wolfstreet.com. He was speaking to us from San Francisco. If you have any questions for Wolf or any of our other guests, we'll ask that question for you if you send it to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.